Hi everyone, I am Kerry Lynn Ray. As Hannah mentioned, I am from AgDATA Australia for your AgForce Over Lunch webinar series. Particularly this webinar in itself is looking at improving resilience through budgeting. Like we'd all like to improve resilience, but we're looking at it from a budgeting aspect within the Phoenix software in itself. So some of the information about this particular webinar series. Mark Lay was due to be your presenter today. Unfortunately, he's just come into some critical family issues and he's unable to attend. He would normally be here with bells and whistles on. He loves all of this information and certainly getting that, that use of the software out there for all of our clients. AgDATA has been around for 30+ years, and certainly Mark has been around for all of those. He is leaving me with extremely large shoes to fill today, but I certainly will do my best at filling them. Myself, I've been with AgDATA for around 10 years this year. I've been in your technical support and training areas. Tech is certainly what I love and enjoy. If you've ever spoken to me on tech, I do really enjoy that. Essentially, I troubleshoot and problem solve all day. Which I do really enjoy, except when I go home, of course. I don't tend to like to fix anybody else's problems, just the ones where you call in. Personally, I come from a ag background of a cattle property in central Western Queensland. Not a lot of people know, but AgDATA in itself comes from the ag background, and all of us on tech support or in the office actually come from an ag background or from a small business background. I think that's really important. For you to understand that we do really know what you're talking about, or we do have that relatable area with you. If we don't understand what you're trying to do, what you're trying to gain out of your software, then the software won't have it. So we must have that in order to make it the best product possible. And certainly it has to have that, so you get all of the information that you need out of it. Now today we're covering budgets, improving resilience through budgets. It's in itself, budget is, in my terminology, the most underutilised product Phoenix has to offer. Everybody puts their financials and their data entry and their BAS above their budgeting. I'm not saying that that's the worst thing you can do. I'm saying that it's underutilised. It's there. Start using it. It can really fit lots of different enterprises and business needs. There's a lot of things that I'll show you today and you go, oh, that was really good. I could really use that. Or, oh, I didn't know that was there. And that's what I'm aiming to do for you today. We're looking at getting you to love your budgets. I'm suggesting you love them. You probably won't love them. Budgets are budgets, but hopefully by the end of the day, you will start to see that experience in that ease in use and the information you can get out of the budgeting software in itself, and particularly for different audiences, for your bank managers, for your accountants, for your business partners. All of that sort of concept is in the budgeting program. We just simply have to teach you how to use it, or just simply show you where it is, and then if you hit any of those issues or want to use that, you can certainly talk to us at AgDATA. So what are we doing today? Essentially what I'm covering off for you is cash flow forecasting. It's a very broad term. Today basically I'm just going to show you about the budgeting window through the cash flow and show you how that screen sort of works and flows. And then into your enterprise analysis. Looking at each enterprise in the business, I'm finding more and more clients are mixed farmers these days. You have, some cattle, some sheep, some crops, some of those enterprise analysis in different areas, and separating those enterprises can certainly help you when you're budgeting. Just allows that sort of focus and that concept to come through really easily. Why the bank loves work tables and planning tables. I'm going to leave you sit on that one. I'm going to teach you about it. The terminology is work tables and planning tables. It's just our terms, but essentially it's some reports and some calculations that you're giving all that information across to your bank manager, your accountant, your business partners, all of that sort of thing, across to your bank manager, your accountant, your business partners, all of that sort of thing. Preparing your gross margin on enterprise production reports, that really comes from your work tables and planning tables. Okay, so all of that work you're doing, it's coming into a nice enterprise production report that does give you a gross margin. What if scenarios? We certainly cater for those in here. There are lots of things that come through when you're budgeting. whether you're looking at, what if we are in a drought situation and we have to feed for another 6 to 12 months before it breaks, or what if we're looking at increasing our numbers, share farming, a property purchase, large asset purchase. We could go on and on. There are lots of things that, what if we did that, what if we do this, that can all come into budgets. We can see that affect the cash flow, and then of course you can make those really interesting management decisions of what you can see. And of course cash flow is only one aspect of this. There's a whole range of other things you're going to be taking into account for all of those. And finally, budget comparisons, your actual versus budgeted for in your report. So I've got a projected budget. I've really sat down and really worked really hard on that budget, but of course we've got actuals for that period of time now. So let's go and have a look at what our actuals say and what we've projected in the budget and see if there is a difference. How close am I getting to actually what's happening? And then of course we can re-project or refocus back across all of that cash flow based on some of those reports that it gives us. Now let's hope that my tech is working and you can now see my Phoenix screen. Can everybody see Phoenix? You can chuck me a nice little comment in your chat line if you like. It's essentially our budgeting screen within Phoenix. Oh, I can see some writing. Hopefully it's all coming up. Wonderful. So you can see my Phoenix screen. Great. Today is an interesting day for me. I haven't used this particular webinar product that AgForce works, so I'm nailing at least one of these things with screen sharing. Certainly at the moment you'll see Phoenix. It's a basic Phoenix budgeting screen, and I'm using the current version 9.1 and our standard example data. Now, the brilliance of showing you this webinar using example data is that you can go home and open your Phoenix and the example data and see the same and do the same as what I've done here. It allows you to really try some of the features and see them before using them on your own data. That's something I really, really like. We do all of our webinars, whether it's through AgForce's Over Lunch series or whether it's one of ours, we do them on example data as much as possible. That way you can really have a play with them without actually impacting on your data. Now, as I suggested, cash flow forecasting is a very broad term, and how and what you include in your budget is completely up to you. Okay? As you've seen here, this is a new budget. It has not a lot of information in it. I'm just going to teach you about the screen. So in this case, you'll see running along the top, I can find my mouse, there we go, you've got all of your months and years. Now, by default, this budget has opened at my current financial year, which this set of data and example data is just a touch behind. It's sitting around October 2017, which is why it's opened up into July 2017 to June 2018. I can, of course, change those. That's just simply the headings, the months and the years. Now, if you look along the left-hand side, it shows all of your categories or your chart of accounts. Now, within this budget, I've got one particular year shown, but if I wanted to, I can actually just go up to the period, choose to set the period, and I can move that along, or I can move the budget out for as many months as I like. In Phoenix's case, you can have up to 5 years or 60 months displayed in a budget. For those that are doing long forecasting, this may be a good option. Outside of this, you can separate your budgets to 1 year or a couple of years in a budget and add as many different budget files as you like. So it's flexible. If you want to have 5 years, you can have 5 years. If you want one, you can have one. If you want two, you can have two. It's flexible to do what you want to do in your particular budget. Now, starting off cash flow budgeting, quite often in tech I get a call on budgets and it's really, they're just wanting some help on where to start. Starting budgets can sometimes be daunting. We have all of these categories and all of these figures and all of these amounts and periods and all sorts of things going left, right and centre. So I'm going to teach you what we call load actuals. Now, load actuals is the terminology we use as to what's entered in financials. That's your actual data. So loading actuals is the actual financial data you have entered, then going and loading it into the cash flow or budget. I use this terminology as a base budget. It's essentially giving you last year's figures to recalculate or base your budget on, and then you can project off the top of it, just giving you something to play with essentially. So from here, I can simply do that by going File, Load Actual. Yes, I'm going to continue. Within here, it just asks me what accounts I want to include, what period. Now in my case, I'm going to grab a full financial year, July to June, and my last full financial year is actually 16 to 17 in this set of books. Certainly might be different at home for you, but in this one, that's what I've got. Again, I can check whether I'm accruals or cash. In this case, this particular example data is accrual, so I'll stick with that. And I need to include my enterprises. You can do load actuals on just one enterprise if you want to. In our case, we're just going to grab them all and put them into one nice sheet. I'm going to click OK. At this stage, Phoenix is just going to ask me, do you want to be inclusive of GST or exclusive? I can certainly choose either. In my case, I'm just going to go in inclusive. All of these figures have just loaded in front of me really easily, haven't they? I can simply go to the period, up the top again, and say move the period and move it forward to say July 18, June 19, and bang, all of my headings up the top. My current financial year or budget financial year is there. I've got all of those load actuals in the particular spreadsheet. It's a nice base budget. I simply get all of that information, and I've got the timing. You know, when things happen, like when your electricity is due or your rates and rents are due quarterly, it's got all of those timings that you don't have to think twice about. They're there, you might have to recalculate them or reproject them, but it's got all of that nice crisp information in there. Nice and easy. So that's a base budget. It's the screen, how you effectively use that months, years, and your categories running down the left-hand side, and how you want to include that cash flow as such. If I roll you to the bottom, which is what most people are looking for, in this case, it's loaded all of this information into me, so I have some cash flow, I have some accounts, all of those sorts of things. And in this case, I roll to a net worth line as well, which is taking into account those cash flow budgets as well as some GST. We're going to expand on that a little bit. I'm going to drop you out of here and we're going to look at enterprise analysis. So I have a nice little budget, which is our example data one, that I'm going to load. Okay. Wow, it's finally in. There's a fair bit of work in here. Now this budget has loaded and there are lots of figures. That I find is the hardest part about budgeting. There is always going to be lots of figures showing which you can easily get confused on where you are and what you're wanting to focus on. Now this particular budget addresses that really nicely. If you look in this bottom left-hand corner here, you'll see that we have separated our enterprise, or done some enterprise analysis, by separating our enterprises or income streams to separate sheets. So in this case, we've broken down to cattle, crops, overheads, and of course everything comes through onto our total sheet. They're all linked across to bring everything together. So the great thing about that is when I look at a specific sheet, it only gives me information for that particular enterprise in the business, filters out all that other stuff. So looking at this cattle sheet, I'm just simply going to go up the top here and I'm going to hide all the categories I'm not using. It just brings that view back into what I'm using, where I'm using, and all of those figures nice and easily. And of course, all of the figures for the overheads and the other enterprises like your crops are all out of here. We're only seeing or showing what's happening in the cattle enterprise as such. This does work exactly the same for the crops. So if I click across the crops, it's hidden everything from here, anything I'm not using, but you'll see in here that we're actually doing a cotton crop. Now, if I had more than one crop, like wheat, barley or canola, I could include them in the sheet, or I can make each one of these crop types, like wheat or barley or canola, a separate sheet. Okay, so this, we do one sheet for crops and we might put all our crops on it. You at home might not like that. You might like a separate sheet for barley and another separate one for wheat, all of that sort of thing. It really comes down to the individual that is budgeting and what best suits you for the view in the budget or how you want to represent the detail. As I said, Phoenix Budgets is flexible enough to give you all of that info how you want to see it. In this case, if we look at the overhead sheet, there is showing all of your general expenses and overheads that cannot be directly attributed to the enterprise or income stream. This is done on a separate sheet, just allowing you to focus on the specific areas you're working in on the budget. So overheads we separate out again away from crops and cattle, just so that you can put the general overheads to the business in that particular sheet. And as I suggested before, everything rolls through to the total sheet. It's the whole grand plan of the budget and what this does to your cash flow. So again, some buttons, there we go. If I roll you down to that bottom line, I think Stephen asked that we get down there. Hopefully, Stephen, you can see it now. This is the basically end of your budget, so it's your total sheet. And in here, it also shows all of that information you've input. So it brings all of that together. At the bottom of the sheet, you'll see your cash flow account over here. And we work within there all of your bank accounts, credit cards accounts, stock firm accounts, like Elders or Landmark. And this all filters through to what we call your cash flow balance. And it is including GST. It's showing the cash flow as it would be for these particular accounts in the cash flow accounts based on your budget projections. So from all that work, what do my bank accounts and things look like? This particular budget also does deal with GST in a budget. This aspect which we cater for the GST to be claimed or paid based off the projection of your incomes and expenses through the categories. So each one of these categories running down the left-hand side are incomes and expenses, and they already have set up your GST rates. So based off those GST rates, then it deals with that GST nice and easily as to what's to be claimed or what's to be accrued or paid out, those sorts of things. Then towards the bottom, we get to planning tables. It's the full plan on each of the enterprises. Now, we're at planning tables and work tables. You see them there. How do they work? Let's expand on that. So why the bank loves your work tables and planning tables? Now, there are two areas in the production reports that your bank manager, accountant, or consultant, bank partners, business partners really love. The reason why they love them is due to the calculations. Now, has anyone ever given their bank manager budget for the next few days or few hours? You get calls and emails asking you to explain how you got $155,000 worth of cattle sales, or how or what your current cattle valuation compared to your budget is. Does anybody get those calls? No? Yes? Nobody wants to say? Certainly in our case, we do see a lot of clients get those calls. So how do you give them all the information? These details you know, and using the work tables or planning tables gets that information to them. So let's start really simply. Let's start with work tables. Now, anyone doing budgets will understand what I mean by a scribble sheet. Sit down, do a budget, and you make sure you've got a pen, lots of paper, and possibly a calculator. So then when trying to figure out, for example, your cattle sales, you write down on a piece of paper, okay, in April we turn off the steers, and we've got around 150 head, and we expect at the moment to get around $780 a head. So then we pull out the calculator, and that works out to be around $117,000. So I would go to my cattle, I would go to cattle sales for April, and I'd bang in there $117,000. But I've lost all of that information, haven't I, as to how I got that. Now, a work table will do that. So let's take that out and let's have a look. On a work table, anywhere in budget, any category, any month, any year, you can either do a right click and select work table, or as it suggests there on that little button, you can click F8 button on your keyboard. This opens what we call is a work table. Now, in my case, you can see there are already some figures here. This is a budget that we've been working on, but let me show you one in use. So I'm just going to put a new one in, and I'm going to say for April, and the comment, we're going to sell some spears, I think we're going to sell. And in my quantity, I'm simply going to say I had 150 head, and we have, or we expect to get around $780 per head. And from there, it's just put in the 117,000 for me, hasn't it? It's done the calculation, and I have all of that information there. The beauty in work tables is that you haven't got a need to use a scribble paper. Plus, now I have the working on how I got to the figure, showing that $117,000 for the month. So if I click Save, there it is in April, nice and easy. Just in the spreadsheet, that's what you see. All of the spreadsheet, we're all really looking at those front figures, aren't we? But we've got those calculations behind it. Now I've given Phoenix the calculations and how I got that figure. How do we give it to our bank manager or accountants so they can call, they don't call or ask you or email you, all those sorts of things? That's easy. Let's go up to Report. Let's choose the Work Tables. And in this case, it does give you a couple of options on how this report shows. You've got by category, by month, or by enterprise. In most cases, the popular one I see on tech support is by category. I'll widen this one out. A lot of screens. Sorry, hopefully you can see it nice and clearly now. In this case, if you look at our cattle sales, you can see that April one there for 150. There's the calculation. That's how I got it. And it's good for you too. You might look back at a budget, want to have a look at the work table, or you're using a base budget and working yourself forward to the next year, recalculating those figures on how you got there, whether they're going up or down. It's really good to have that information within your actual work table as well. Now, within any reports in Phoenix, you can obviously print, save, or email directly out of those reports. So you can simply send them straight off to your accountant or bank manager or whoever you're wanting to send them to. Now, work tables are great, but let's expand on them. Let's look at your planning tables. Now, I'm going to close this particular one, and I'm going to stay in that cattle aspect area. Okay, so I'm going to keep on this particular cattle sheet. The cropping ones are here in the crop tab, and they work very, very similar. There is only one minor difference in there, and certainly when you go and put one of those in, or we can potentially have a look if we've got some time after these ones, and they're exactly the same, but the same concept is there. If I scroll to the bottom, you'll see in here that I've got the planning tables and the cattle listed there. So within here, you can do this for any livestock. I'm working in cattle here today, but you can do sheep, horses, dogs, camels. Yes, we have clients who farm camels. You can do it for any type of livestock that you like. I'd normally recommend, if you've got more than one livestock type, that you maybe look at separating them in sheets. Sometimes those general categories like livestock, selling expenses, those sorts of things, can get a little bit messy if you're not separating to those sheets. But of course you can do as you please in this particular area. Now, how do I get to a planning table? Now, you can go down the bottom here and do a right click and go to production. Or the easiest way I find is you can go to the plan button up the top. As you've noticed in Phoenix, there is more than one way to skin a cat in here. There's normally a couple of different ways that you can do things. And in budgets, we're extremely flexible. Makes my part on tech support really hard sometimes as to how I do something with a particular client. And each tech is different to a degree. We all work a little bit different to each other, all favour different areas in the software, but we all get you to the same aspect, same area. Now, in cattle planning tables, you'll see here, I have a cattle one. I can simply go to the production, and it brings me up my planning table. Now, I'm just going to drag this down so you get a really good view. Now, in this particular demo budget that I've got here, we are working in that July 2017 to June 2018, okay? And that's why all of those periods come up in there. They're simply from that front screen of the budget. They're mirrored across onto a planning table. Now, all producers have a plan, regardless of what you produce or farm. Now, a cattle producer will say, okay, the calves stop anywhere from August through to December, and then we'll turn off steers and coal heifers and empty cows maybe in April or May. That plan you have in your head is what you're going to show here. That plan is really invaluable, isn't it? That plan that you have and that you've got, you're basically letting that information flow into your budgeting software to give it to everybody else who's doing it or looking at it. Now, in this case, in my planning table, I have these tabs running across the top. Now, in my case, I've got cows, bulls, heifers, and some steers. Now, those tabs, the technical word is actual planning table members, okay? And you would normally break down to your class of cattle or livestock, and in this case, we break down to a full cows, bulls, heifers, steers. Now, keeping in mind, this might not suit everyone. Sometimes I will see calves, and other times I'll see weaners instead of calves. It's how you value your classes and how they can be tracked within your enterprise as to how those tabs or planning table members are described, okay? But normally, you're classing cattle. By all means, keep it generic. Don't say, you know, the 2017 steers, the 2018 steers, the 2019 steers. Just group them all together as steers as much as possible. If there's a huge valuation difference between them, then you might break down to a couple. Particularly if you're doing some breeding and commercial, you might want to look at those, having separate planning tables for breeding compared to commercial. Be careful with those though. Sometimes, you know, your breeding doesn't make the grade and will end up in the commercials being sold out. So it's important to know where those livestock movements are going. But we're keeping this nice and simple and just saying cattle, and we're breaking down to those 4 different classes that we've got there. Now, down the left-hand side, as you've seen, we've got the period. So we've got July right through to June, and then across the top, we've got our workings. So we've got our dollar per head, or our management or market value. Born where the natural increases, so calves are bought in, or steers or heifers in this case. We've got our purchased column, so where purchases are made from for any of these particular classes of cattle, and then we've got our in and our out. Now, the terminology or an example of this is your class movement. Heifers will eventually move class from heifers, it will show as out in heifers, to the cows. This will then show in the in for the cows tab or planning table member. So any of those class movements, they come in, they go out, that sort of thing. Next to this is sales, so any sales that come in, and then our losses, so essentially our deaths within those different classes. Now the on hand, this will fluctuate depending on when your sales occur, your purchases, your natural increases, all of that. So that essentially is the head number that you have on hand at any point in time. And the value over here on the right-hand side is the value of the cattle on hand, worked out by how many you had on hand, as well as the dollar value per head or the market value you've given it in here. So the full plan on what is going to happen and when is what you'll be putting in here. Now I'm currently sitting on the steers tab, and you can easily see that there is an opening line. Now this is the only difference between crop planning tables and cattle planning tables. Cattle planning tables or livestock planning tables, you have an opening line. Cropping ones you don't, you just simply put in your hectares, that sort of thing. Okay, that's the only difference. They work exactly the same. In this particular case, you can see in my opening, I valued them at $500 per head, and my on hand, I start out with $165. Then if you're looking down, you can see in December, I've got some purchases. I'm going to buy about 50 head, and I'm going to turn off and do some sales of around 110. So you can see in this on hand, it's reflecting all of those changes, isn't it? It's bringing in those sales, bringing out those
purchases, all those sorts of things are fluctuating. And it's giving you your value of what that stock is valued to you on hand at any point in time. In our case, you'll see also we have a born in April 2018. Now, this particular budget doesn't value their calves. They actually bring their natural increases through their steers and heifers, okay? And that's what I suggested earlier. Not everything will fit everyone. What you value and what you want to show in your budget is your decision. The Phoenix software in itself can do however you like with it though. If we look at the heifers planning tables, it basically has all of that information again. It has all your sales, your purchases, and again, our born is coming into our heifers. Now, how valuable do you think your plan is to you? How valuable do you think the plan is to your accountant or bank manager? Some of what we are doing in this budget is giving our bank manager accountant confidence in what we're projecting, isn't it? What we know our expenses, that we know our incomes, we really know what we are doing and that we can easily prove it in a budget, isn't it? Confidence in what you're doing and showing that and proving that can be really valuable to you. Now, how the work tables are an extension of planning tables is if we look at sales and purchases. Now, I'm going to do a purchase, okay? So we've got work tables. We did them through the main screen a little bit earlier. Planning tables use that exact same thing. So the planning tables is the plan, but we still use work tables in here. So I'm going to do a purchase in December, and all I do is simply click on purchase and start typing. Up pops a work table, doesn't it? It's again the calculations, how we get there. So it's brought up December for me. Now in the for column, I skipped over this a little bit earlier in the work tables. The reason why is it impacts on planning tables. And here we've said in the for planning tables, this work table is for the cattle and for the heifers planning table member or tab. My enterprise is putting in as cattle enterprise for me. My comment, I can simply say heifers. My comment, I can simply say heifers. Again, it's easy. I'm simply going to put in the quantity, 20 head, and I'm expecting to pick them up for about $5.50 per head. My total has popped up already for me, showing it's around $11,000, and I simply click save, bang, it's in the budget. And if I look on the right-hand side, my on-hand value has gone up and down based off that, hasn't it? All of that information is nice and easily in there. Now, we've looked at the plan. That's where everyone starts. You know, we think, okay, we're going to calves are dropping, we're going to do those weaners become steers and heifers, or however you term it. Now, based off that plan, you've of course got your variable costs. You've all got expenses for all of these wonderful things that we do. So I'm going to close here. This is your plan. Let's look at your variable costs. Now, in this case, most of the time, particularly in budgets training courses, we'll get you to go down to the bottom to your cattle or planning table member down here, and you'll do a right click and go to variable costs. Now, these variable costs out of this window, it's exactly the same like a work table. It's just the category is selected in the bottom. Okay, just allows you to run up and down those lists nice and easily. If I look at a few, I'll just drag it. You can see a whole lot of work tables that we've got in here. But you can also see that same view or do the same variable cost in the worksheet as well. So I'm going to have a look at this particular fodder one. Okay. We've got a heap in here. I don't need to show you how work tables work again. You know how they work. In this case, it's the variable cost based off it. So in our case, you can see here that we've got an expense for hay in August for the steers. And I've said that they're eating 49.5 bales. Now, how did I get to that calculation? You think I just thought it up? Sometimes, yes, it's just an educated guess. But in other times, you've got an import or calculate field within here as well. Now, these are worked really, really well with planning tables. Now, what we've done is we've said we're going to put out the hay, and we've pressed C to calculate on the quantity tab. Now, from here, it's given us on hand, we have 165 heads. I don't have to go back to my cattle schedule, do I? Most people will pull out that cattle schedule and go, okay, well, we've got 165 head on hand, so we'll work out how many bales off that. You don't need to. Phoenix has that schedule. It knows how many cattle, and in here, we've said specifically the steers. If I said all, it would give me everything that I have on there. So in my quantity, all I've done is I've said 100% of those 165 head on ground of those steers, I'm going to give them 0.3 of a bale. And then all it's done for me is worked out that I need 49.5 bales, and I value them at about $60 a bale. By giving a head calculation, it easily calculates this back to the head number or the schedule of steers I have on hand and working it out for me. Now this also works backwards. For example, I actually call budgets that have planning tables done in them long-term budgets. These budgets take some time but can easily be moved or used in the next year or period budget. I could simply go up the top and go File, Save As into a new budget, move the period forward, and then I could come back and change those planning tables, couldn't I? I could just change the numbers that I had on hand at that point. I could change my sales and purchases. Then that would actually flow through to my variable cost, because I've said based on I have on hand, if that on hand value changes, then it effectively changes my variable cost, doesn't it? I can easily use this budget long term. It gives me that flexibility based off that planning table and those variable costs on a head valuation. It's nice and easy. Certainly I like them, or I term them myself personally as long-term budgets. You do a bit more work in here, but you get a lot more for it later on. There is great value in using work tables and planning tables, not only for your bank, manager and accountant, but also for you. Now that you've really got the idea of how these work, what do you get from the planning table? So I showed you a work table report, but what do you think you get from a planning table? I've got incomes, I've got expenses, those variable costs. Anybody know what you get from a planning table at all? We use the term enterprise production report, and it essentially gives you a gross margin. If I close out of here, again, anything that you want, that's a good one, David, your projected livestock inventory, yes, you have your schedule, absolutely, but it will give you the gross margin as well. So your schedules and your plan, in here, we get a nice report off it. So if I drop down reports, anything you want some reports on, it's always through your reports button at the top. And in this case, we actually use the production report. So that's what we're producing. Okay? In our case, it's showing just the cattle because I'm on the cattle sheet. If I were on the crop sheet, it would show me the cotton one as well, and they work exactly the same. Now in this case, I'm going to say we're going to use the production report for cattle and give me the detailed report, give me everything, what we produce, our movements, summaries, gross margins, and the work tables as well. So how I got those calculations, the work tables can be included in a detailed report as well. I click report, and up at top, I have in here all of the information that it can. Now in my case, I've got some feed demands in here as well. They're set up on the planning tables. They're optional, you can have them in, you can have them out. Certainly we have all our production. So when calves drop on ground, we're saying April for heifers and steers, and it gives us that information. If I move down the report, you've got all of that information of your schedule projection as well, David. When they birth, any purchases, all of that is coming into here that you can see as well. Opening and closing market values, and then certainly your cost summaries. So I move you across, there's actually 4 pages to this particular report. And in that case, it does give all of the cattle sales and all of your costs. All of that information is certainly here under your gross margin. Now, David has asked a wonderful question. Does the feed demand auto-populate from livestock module? No. Budgets doesn't actually talk backwards to any of the other financial or livestock or mapping areas. What it does though is in the planning tables itself, you can tell it what feed demand it is. Okay, so you can say what you want it to be through there. In here, the work tables again are listed towards the bottom. They're exactly what you saw before. It is simply all of the information and the calculations on how you got there. Okay. Like any report, like we did with the work tables one, you can certainly print, save or email directly out of here. So you can email it straight across to your bank manager or your business partner, anything that you like. All of that, though, can certainly be used. Does anybody at this point think that they like planning tables and work tables? Would you use them? Did anybody have an aha moment? David has. Wonderful, David. I hope that works really well. In this webinar, we're going to cover off on what-if scenarios. Now, this I'm going to touch on lightly, and it is through that resilience. Certainly is this area that I've done a fair bit of work in. Now, what-if scenarios really come down to what you want to do or what you want to project or what you want to see cash flow-wise project. Okay, because essentially we're in budgets, we're only looking at cash flow. There is a whole heap of other things that impact on a lot of those questions or what if, but certainly from a cash flow point of view, how does that look? Now, there's a whole heap of them. What if you purchase another property or block of land? What if we took on share farming? What if we increased our numbers? What if we have to keep feeding for another 6 to 12 months until the drought breaks? Now, this particular scenario I am actually very familiar with. The drought seminar we did in Central Western Queensland a few years ago tackled some of these what-if scenarios, and certainly personally I come off a cattle property in Central Western Queensland and understand those thought processes really quite well. Now, I recommend doing your budget as you project it, okay? So this budget is my projected budget. If I'm going to run what-if scenarios, I normally suggest to go up the top. It's really simple and easy. Go File, Save As, save this particular projection budget into another one, and we're going to play with that. Now, the reason why is we keep that projection budget as our master budget. Master budgets should never be touched. This is what we've projected, this is what we've handed to the bank manager, this is what's happening, okay, as far as they're concerned. If we want to have a play, what about we just simply save it into another one? Have a bit of a play. You've still got the one there that we sent to the bank manager and it all looks nice and happy. If you look up the top left-hand corner, I've given mine a very generic name, What If 2018. Of course, you'd want to name it something a little bit different. Be particular in those namings. When you've got a lot of budgets, it certainly can help if you're a particular way, or stick to a particular way that you name budgets. That way you always find what you want. Now, in this case, I've got it into a brand new one. And I've still got all that working, don't I? I still have all those sheets down in the bottom left-hand corner, cattle, crops, overheads and totals. Now, doing different scenarios in a separate budget is great, but doing different scenarios or what if in another sheet is better. So I can still leave my cattle and my crops and my overheads here, can't I? And I can just load a new sheet. All I did is click the new button in the top left-hand corner, and it's going to add another sheet in. So in my case, it's named this one sheet 5. Okay? All it's done is popped in another sheet for me. I could put any of that information, those recalculations on figures, the big asset purchase or the extra loan repayments in here. Okay? It'll all flow through to the total sheet, and then you see that cash flow effect. Okay? So that can easily be done in here. I'd rename this sheet to whatever it is, whether it's the big property purchase or the 6 months on the back end of the feeding, all that sort of stuff can easily be done. There are other ways to do what if though. When you're looking in a drought situation, sometimes we're really looking at cutting costs, aren't we? Sometimes we're really needing to look at what we really need to focus on and what we really need to cut down on or what we really need to keep going. Now in those cases, sometimes clients will come at it from a percentage point of view. What if I cut some of my variable costs by 5%, which gave me a bit more leeway for some of those feeding costs? Some of that concept is certainly there, and a lot of people will work with that. Now, Phoenix has a tool called factoring. Now I'm actually going to change the view, okay? I'm going to drop you across to your overhead tab because this has got a lot of working on it, okay? We can simply use off that and I'll show you that view. But did anybody know that you can actually change how these categories sit along the left-hand side? In our total sheet, we've got everything, don't we? I could change that view and group them together. Now to do that, it's actually grouping and it's through your sort button at the top. I click on sort and I'm going to choose the group order for all categories. And I'm just simply going to click OK. What happened in my budget? I have group headings, don't I? If I scroll you to the very, very top, I have enterprise income, don't I, over on the left-hand side. And if I scroll towards the bottom, I've got variable production costs, and I've got overhead. And for each one of those, I have a value as to what the total went through and also a percentage of what that is in my budget, don't I? Can you see how that would be really, really interesting in a drought situation or a situation of flooding or a situation where you want to cut down some things or you really want to get a different view? Can you see how that means a different way or a different area? It does, doesn't it? Now, I talked about factoring, didn't I? Let's go to overhead and let's go to variable production costs. And let's say I wanted to factor those by 5%. Or let's do our overheads actually. You'll see the figures move nice and easily in that big one. In that one, I can factor simply by going up to Tool, Factor Cells, and I want to cut them down by 5%. Just 5%, I'm not being silly, I just want to see if I can get down by 5%. I click OK. Phoenix does a bit of magic. Here are the budget figures all again recalculated, just 5% less. And of course, that flows through to my bottom line, doesn't it? My cash flow balance now reflects 5% less. And if I click across to my totals, they're in there as well. And I can see what my cash flow budget looks like now with 5% less. Do I have more cash flow? Do I have more area that I can spend on other things like feeding, that sort of thing? All of that factoring can be done to increase and decrease the value. Okay, so you can go up, you can go down. We're hoping to include our income to go up 15%, and we're hoping to cut those production costs or overheads 5%. Probably around the wrong way. Probably might see a 5% increase in income and a 15% increase as well in the costs, but that's the terminology and that's looking at it. And this particular view I really find interesting for a lot of people. You know, in our budget, what is our capital and development? In this particular budget, it's 0.2%. You know, what are we doing? If you're doing a lot of capital infrastructure, what does that do to your cash flow? And then what does it do percentage-wise? What do you think it's actually taking up? Go and have a look at that. You'll actually find some really interesting information in that budget. Things that you didn't think were taking up a lot, potentially could be taking up a lot. And you think your sheep aren't doing as well as the cattle, but when you look at it on a percentage basis, they might be. So it's some really interesting concepts in there and how you look at it. Now we're coming towards the end. There's one more thing to cover, okay? If I notice that you've been popping in questions as we go along, I certainly am trying to address those as much as I possibly can. And I will leave a lot of time at the end, but if you have any, make sure to keep popping them in. Now this last one is what we call a budget comparison report. Okay? A budget comparison report is essentially, I have done a projected budget and now I have actuals. What are the financials I have entered into Phoenix for the same period? So actual that I've entered versus what my budget projection was. What do I see? The difference between them. We're starting to assess how we're budgeting, aren't we? how close to what's happening is our projection so that we can get better and better. Now, to do that, I recommend always opening your financials first before going into budget. The reason why is I can quickly click across to this little icon and get back to financials easily, can't I? Budget comparison reports are actually done out of the financial module because it's drawing actuals in, okay? So going to financials first, then launching budgets through here is a great option. Allows you to quickly and easily move between the two little icons down the bottom. Now that I'm in financials, I'll simply go up the top to reports. Now it drops down my view drop down. If you're a Phoenix user and love reports, you'll be very familiar with this. This one is a budget comparison. So that's the terminology we use in here. Actuals versus budget is a budget comparison. Now, like all reports, you must drop down all of these drop downs before you actually get to click that generate button. Okay, we're setting all the parameters we want in that particular report. So in my case, I'm going to say, give me my cash flow account. And for anybody who's using Phoenix and doesn't know, in any of these drop downs, you can do a right click and it'll give you some quick options like select all, unselect all, and then accounts, cash flow accounts, that sort of thing. Period, I'm going to say financial year to date. Give me all of that. And in my enterprises, I want to see all of my enterprises. And in my groups, all of my groups. Under the option drop down, which is our last one, this is where we're actually going to select that we show the difference, the actual compared to budget. We say whether we want it inclusive or exclusive. Now that doesn't matter whether your budget was done incorrect or your data was entered incorrect. It will actually reformat both of those to be incorrect on the report for you. Okay? And the available budgets is where we select our particular budget. In my case, I'm going to use the demo one that we did a little bit earlier, which is this particular one. I'm going to click generate, and our report is going to pop up easily in front of us. Now I'm hoping that view is good. I'll maybe expand it out. Maybe that's better for you. So a budget comparison report essentially tells us, now my months I've chosen financial year to date, so I'm going July through to October. Okay, just what actuals I have in. You could do this for a 12-month period, you could do it for a 6-month or 9-month, anything that you like, but essentially whatever actuals you've got for the budget period is what you're comparing. So you need to make sure that in the periods you're selecting the right ones for the budget as well as your actual. Now in here you'll see that I've got running down the left-hand side the categories, and of course it's got all of your incomes at the top. And if I roll down, you'll actually see that it's got all of your expenses. Now in my case, it's filtering those as well. We've got some operating payments and some operating receipts, that sort of thing. Sometimes, depending on what your Phoenix is actually activated or subscribed as, will depend on how this shows a little bit. Sometimes you'll see incomes and expenses. Okay. In this particular report, though, this is the information you're after. It's got the actual financial data that happened. It's got the budget data, so what you projected would happen in the budget. And then, of course, the difference in a monetary value between them. Okay, and this particular case, a little bit of this why I percentage. It's going to happen, it always happens in webinars or group training. In your Phoenix at home, you'll see also, mine's just missing, it's having a bit of fun with me. You'll see also there's a percentage difference running down the right-hand side to the difference column here. I do apologise. As much as I've tested this, of course, it was going to throw me a bit of a curly today. And we're not very nice to this particular example data in this set of books. We have to do a refresh every now and again because we're a bit mean in webinars and all the funny things that we do to it. In this particular case, though, you've also got a year's budget. Now, that shows you what you've projected in the budget for the full year of that particular category. So I'm 3 months in, I'm July through to October, and at that point I could go, okay, for crop sales, you know, I've got 186, I didn't budget for anything, but I did budget the whole year for 2.2. So you could assess that if I've used all of that income or used all that expense I've budgeted for, you go, okay, I really hit the mark with that one, I didn't quite get there. I might have to go back to that budget and reproject that. Look at that again, change that budget to be more relevant coming forward based off the information that you've got. Works the same if we roll down a little bit. You've of course got your expenses. There's always more of those than the top incomes. And in this case, on a second page, it does give you all of that information into what was the surplus or deficit. And as well, we do an analysis of funding in some particular cases, which just is those account movements. So money went from one account to the other account, what they're opening, moving, closing, and budget and difference between those accounts as well. So it's a really valuable report in how you're going within that budgeting area and what the differences is between what actually happened and what you projected. And of course, you've got those print, save and email options out of any report that you've got in Phoenix. How are we all feeling? Are we giving ourselves a pat on the back? We're at the end of the webinar. If you have any questions, please put them in the chat line. I am more than happy to answer any of them. We're sitting right on the timing, actually. I've done that pretty well. Actually, I'm going to give myself a pat on the back. We're sitting about that 1:30 mark. So if anybody certainly has commitments that they need to get to, thank you for being with me today, but you're by all means ready to go, you can. But certainly any questions that you have, pop them in and I will address them and certainly be able to help you with any of that.